Welcome back to the Real Estate Huddle. We are excited to be here. And question for you, what if you could step into somebody else's mortgage rate and basically go back in time and get half of the percentage of mortgage rate that exists today? That is exactly what our guest, Co, did, and he's under contract on a property. So we are so excited to have Co Snyder in the house. Thank you for joining us, Co, and taking time off your day to be here.
Definitely.
Awesome. Well, we're gonna jump right into it because some people are like, "How did you do that?
Yeah.
Like, what are you talking about?" And so what we're gonna be, the topic of today is assumable loans. And whenever we mention that to people, like I have heads turn. I'm like, "Wait, what? That exists? Are you serious?
What is that?"
Like for real? Like most people don't even know that these are out there and that they exist. So, Co, give us a little background on your story and like, you know, what brought you to the Denver area and that sort of thing, and then we'll dive right into the situation here with the Assumable.
Sure. So I was living in Hawaii and on to move out of Hawaii. So I was like, Colorado's nice. Lived here before. It is expensive, but not relative to Hawaii. It's relatively less expensive. Enjoyed Colorado. Lived here about a year and a half, 2 years so far. After moving back, decided it's about the right time to buy a house, especially since it's a buyer's market right now. And pretty much just prepared myself, saved up enough money to put 20% down on a home, which is in my price range, and just having everything all lined up, keeping a job for at least 2 years. All the normal stuff you'd want to do for purchasing a first home.
That's awesome. That's great. Well, and this is like the biggest testament to living in Colorado. Did you guys know that people from Hawaii moved to Colorado and they're happy about it? Like we always think like Hawaii is just this off tropical, like amazing place, you know, and it is. It's incredible. But why Colorado? What brought you here?
One is I like the snow. I like the mountains. I'm not a big like beach person, so it's not like I have to be anywhere near the ocean. Pretty much Colorado's relatively safe. It has a relatively big city, not as big as like the other major ones, but Colorado has a lot to do outdoors and indoors.
Cool. That's awesome.
And when you were here before in Colorado, you lived in the mountains.
I did. I was working at Keystone Resort, snowboarding all winter, so I got to go snowboarding pretty much every day that I wanted to.
That's awesome.
Yeah, it was good.
Yeah, seriously.
Went from Hawaii working as a snow guy.
Yeah. I pretty much.
Keystone, that's perfect.
Yeah, I pretty much graduated from college, and I was like, "What do I want to do after I graduate? I just want to go snowboard all winter."
So, have you ever seen the movie Johnny Tsunami?
No.
Oh,
I know
okay.
that.
It's a Disney Channel original. I grew up on it. You should go watch it because you're living like the exact lifestyle.
Everybody's
Surfing and then snowboarding. It's perfect.
Well, cool. Well, it's good to hear your background. And now that you've been here, let's talk about how you got connected with us and how we came to know each other.
Yep.
Do you mind sharing that a little bit?
Sure. Pretty much when it was time to like, eventually I was like, I'm going to look for a real estate agent. I just went online, looked different people up, started watching some YouTube videos, and I came across your channel. It's like, okay, I'll just call that number or text that number at the bottom and see about the process.
Awesome.
So pretty much just like feeling ready and then just reaching out.
That's awesome. That's great. And what, like, your experience, you know, from reaching out and talking to some random stranger that you saw on YouTube to today, like being under contract on a home, right? Like spoiler alert. How's that experience been? I know you work closely with Brock and I, and Brock's been with you a lot through the process. You know, tell us a little bit about how that's been.
Sure. So ultimately, just to start off, I was like, I'm gonna just reach out to somebody and see how it goes. You were the first team I reached out to, and everything seemed legit. You had good information out there, so I assumed that pretty much your team would know what they're doing. Brock's been great. He's has a lot of engineering experience, which helped out. So I feel pretty confident whenever I was viewing the houses that I could tell if a house was going to be worth it or if there were any issues.
Yeah.
Pretty much it just, a lot of stuff was just pre-work, just knowledge, learning, researching. So a lot of stuff I kind of knew going into it beforehand. So
Nice.
Just looking some things up after I started. And yeah, going through the home property search, it's a lot of stuff to think about.
Totally.
So,
Yeah.
but seeing some houses got me to kind of know what I wanted or didn't want.
That's great. Well, and you mentioned Brock's like picking these homes apart like like an engineer, right? Just like looking for any cracks, any unlevel floors, like the red flags, right? To make sure that we're not getting you into a money pit, something that's going to cost you down the road. And it's got to be a good investment too, right? It's home first, but second is investment.
Yeah,
So,
especially in the price range I was looking at, because there's a lot of homes that are like in heavy need of work.
yeah. Oh yeah. Definitely. Yeah. And that very entry level single family price point, you get some that are just going to cost you down the road if you get into those. So you don't want to make a mistake, especially at that price point. So awesome. Well, let's talk about Michigan and just a little bit about that experience as far as, when did you first hear about an assumable loan?
It's been a while, especially since like all the mortgages were pretty much just like 1% back like 5 years ago. So a lot of the homes which were pretty much bought back then, a lot of people are selling or trying to sell the homes now. They have that interest rate, but a lot of them have paid down to like halfway already, so you have to pay that amount anyway up front. Just after learning about different options for the home buying process, loans, that's just one of the things I learned about. Don't remember how long ago it was, but just one of those things I knew about.
Awesome.
Yeah. So with Michigan, the one thing that, so prior to us going to see the home, I called all of the listing agents to try and get the information, the download for what the homes were. And this particular home has solar on it, but it's completely paid for. So as a buyer of this home, you can look at, I am not going to have an electric bill. So that was like a big selling feature.
That's
so
huge.
that was really cool option there. But that was not the biggest selling feature. This one had an assumable loan on it, but the marketing said the solar was the bigger deal. So when we looked at it, that was where we made the decision based on solar. But as this was kind of in your top three, and as we looked around through some others, did more follow-ups and more phone calls and got more information. And this is one that the assumable actually was within reach. So with an assumable mortgage, sometimes let's say the house is worth $500,000, but the mortgage is $300,000. You have to come up with a $200,000 gap, that $200,000 difference. So that way the seller will net $500K total, but you can only assume the $300K loan at that low rate. And then what do you do for the delta? So coming up with $200,000 out of pocket is pretty challenging for a lot of folks. So this one was where she hadn't owned it for too long, so that gap was a lot more tenable for you. So, which kudos to you for being so astute with your finances to be able to have that. It made this an option for you. So to be able to have the cash down and take the rest on the assumable. So I think we were talking numbers earlier. You're saving about $1,200 a month in mortgage payments.
Yeah.
At the same price point. So
Crazy. Yeah.
So free solar and $1,200 a month savings. So you're almost 50% under what the most people end up being for that purchase of that home. So that will help you monthly quite a bit. So
Well, this was just a storm of like low rate activity, right? Where we had so many buyers, like record volume years in 2020 and 2021. And everybody was in on those rates, right? It was such an asset to have a rate that low during that time frame. And then that has since long gone, right? Like for our listeners, if you haven't been aware, like rates are in the 6.3 to 6.4 range right now today. And so, it's a different animal. And a rate, people may think like, it doesn't matter. Interest rates don't matter. Well, look at a payment, right? Like you're looking at a payment that's around $2,000, right? With everything included in it, where a normal payment with today's rates would be more like $3,200, and that gets more and more exponential as you get higher in price or in how much you're borrowing, so it just makes a huge difference. And what was your reaction when you first learned that you could assume a loan from somebody else?
So my first reaction to this is that's a really good deal.
Yeah, sweet.
Yeah, it seems too good to be true. Hope that everything goes through and it gets approved to be assumed. So that's
Yeah.
my biggest thing. Hopefully there's no issues with it. So far the process seems good, just waiting. But I always have that like thing in the back of my head is like, maybe it won't go through. Maybe it'll fall at the last part.
Yeah.
Yeah.
And so one thing to be aware of, so you are in a spot where you gave yourself enough runway from your current living situation to when you need to be into a home.
Yes.
And a typical loan assumption is going to take 60 days on average, if not more. So having the patience to be able to do that, and kudos to you and your diligence for getting the paperwork in real quick, but it just naturally takes a little bit longer to check all the boxes to move along. And you're, enduring through that really well. So you're being really astute with getting your details taken care of. So,
Yeah.
but that's one other thing is being flexible on your timing allowed you to be able to go into this position as well. So
Totally.
that's one thing, typical 30-day close on a home, we're going to at least double that. But the good news is you're going to save $1,200 a month. So I can wait an extra 30 days to save that kind of money.
Well,
So
not only $1,200 a month, but like you think about it, if you hold this loan all the way through, like if it was rates of today, like 6.4, let's say, then that $300,000 loan, you'd be paying about $700,000, total in interest, right, over the 30 years of that loan. Where in this scenario where you're at 2.875, you're going to pay probably just under $500,000. So you're saving like $200 to $250,000 in the full term of the loan as well, along with just the monthly savings. So that's killer. It's incredible. Even better than a 50% off snowboard, right? Were you like doing one of these when you like?
Pretty much.
Absolutely.
Pretty much.
People actually do that in Hawaii, right?
Yeah.
Okay.
Shaka.
All right. That's cool.
Yeah. It's called Shaka.
Nice. That's good. Awesome. Well, Brock pointed out one of the cons is just it takes a little bit longer for this process to work out. So a lot of people are probably confused. Like you said, your home's in Denver, but we've been calling it Michigan. Michigan is the street, right? So like, just want to clear that up. And then also, some people may be confused as far as like how this actually works and why isn't every house like this, right? So let's go through a little bit of the logistics as far as that goes. First of all, most people do conventional financing, and so conventional is just the type of loan, and you can't assume any conventional loans, right? The only loans
due upon sale clause in the loan.
Exactly. So the only loans that can be assumed are FHA loans, which are government-backed loans, and VA loans. And those are built into the language of the loan, right? And all the loan docs. Those are assumable.
And USDA loans, but
yeah,
those are not as common. So.
We don't have very many of those just because those are like rural area specific in the outskirts. And it is a great opportunity. More people should take advantage of USDA loans, but we just don't see it as often. But those are the opportunities. It's on FHA and VA. If you go for a VA house, that veteran has to forego their veteran eligibility to be able to give up that loan, that rate, and for it to be assumed.
What does that look like? What does that mean?
So basically, that means that they no longer have the advantage of the benefits of a VA loan. Right. So they would forego that, and someone like Co could come in and assume that. Usually that only happens when veterans are aging and they're out of home ownership and they're getting to the point where they're ready to go to like their senior center and stop, being a homeowner. And so in those cases, we see veterans phase out of that
or unfortunately if they've passed away, right? So that's another one that could carry through.
That's a good question. I actually don't know. That would be a good thing to look up and see, because if they're deceased, I don't know if that benefit can be passed on by the heirs or not, because it is an existing VA loan. Do you know the answer?
I was told different things by different people,
Okay.
but more favorable to if they pass away and the heirs give it up, then they're okay.
I would think you would, right? Because they don't need their VA benefits anymore, but it is still a VA loan that's in existence.
Yep.
So that would make sense to me. So awesome.
That's a very limited population, right? So
Very.
You're looking at that's a really small percentage. So we have 12,000 homes on the market that may be like 50 total. Mm-hmm. So pretty small percentage.
Yep, absolutely. And also you mentioned a gap, right? And you just happened to you did a great job saving for a down payment. You had the perfect gap to make up the difference in this one. Mm-hmm. And that's great. And a lot of buyers don't have that. And that's what stops them or makes it so they fall short of being able to go after an assumable loan. So you've got to be able to find an FHA loan for the most part. And you've also got to be able to have the right gap amount saved up in a down payment to have these kind of savings. And in some cases, like credit unions like Belco, and I've seen Canvas and Climb, some of these will do a HELOC, initial HELOC that will be in second position to the assumed loan, and they will allow that to happen. And so you can assume that the first mortgage and then have a second or a home equity line of credit on top of that, but you're looking at like 8 to 9% on that second line. So a lot of times that kind of negates the savings that you're getting on the assumable too. So we do have resources for that as well. If someone just can't make up that full gap, but they're close, you could do something like that as well. So awesome. What would you say, like, has your experience been working with, because remember, you're working directly with the seller's lender.
Yes.
Right? So you're going through their loan, and in this case, the lender in this case is Freedom. Okay. Freedom Mortgage, a huge underwriter, right? One of the bigger servicers in the country. So what's that experience been like? Because you don't just meet with your loan officer and go through that process. It's different, right?
Yep. So far what it is pretty much getting the information for it, submitting like the paperwork to get it done, then waiting for the first person to reach out to me, tell me what I have to do, what to submit. They send it to the next person, which has to review it and all that stuff. And I think there's like 1 or 2 more people that have to review everything. So it's one person at a time. Once it gets past the first person, I haven't really been able to contact them. So it's one of those weird things that's pretty much like dead silence from the person once they're done.
Yeah.
So makes it tricky, but if you're patient and you like just trust the system and everything goes through, then it should all work out. As long as you have everything lined up, can get access to the paperwork, submit it in a timely fashion.
Totally.
Yeah, and one other thing that makes sense now, but I was unaware at the first start, is when you're doing an assumable, the seller has to authorize you to communicate with their lender to be able to talk loan terms. So you have to fill out your information, the seller has to sign it, that has to get submitted and uploaded into the file, and then now you're authorized to talk about the account.
Makes sense.
So it makes sense for privacy things, but that was a little bit of a hiccup where, we had filled out our end of it, but the seller hadn't filled out theirs. And then when we finally got the right revision, they uploaded the old ones. And there was just a little domino effect, but you've been very patient with it. But
Got some cost savings on appraisal, right? Really no need for that because there's no new loan. So that's kind of nice. That's like $800 that you saved. And then inspection, pretty much the same process as far as the inspection goes. There's not really much difference there. So just thinking through some of the ins and outs of the experience, true or false? Is it worth the rigmarole of going through, 4 different contacts at the bank and making this all happen? Like, do you think it's going to be worth it in the end?
If it goes through, yes.
Yeah.
If it doesn't go through, no.
Now, you got pre-approved with a lender prior to doing this. So does that give you a lot of confidence, like knowing that you've been pre-approved, someone's looked at your file?
I guess so, yeah. It's pretty much just the whole home buying process, whether or not it's an assumable mortgage or not.
Yeah.
You have to get proof of approval for most situations. So
Yes.
yeah. So I guess it
Cautiously
helped.
optimistic.
yeah,
Yep.
I'm optimistic.
yeah, no.
I think it sounds like you're pretty qualified. It sounds like it should be a slam dunk.
Yeah.
Hold on.
Never say, knock on
a
wood.
buyer with a 20% down payment. I mean,
know.
that the
Should be
job for
perfect.
2 years, like there's a lot
Yeah.
of great things that are happening there.
And I think
so,
he's just been
and-
snowboarding all last
I
season.
know.
He's getting ready for another season, right?
Yeah.
Is there any advice you would give to someone else who wants to go through this process?
Yes. So one would be read, because research, they say luck is just timing and preparation. So be prepared and patient.
True.
Yeah. When the time comes, hopefully it comes at the right time. That's good. But mostly reading, researching, watching information from reputable sources, having 20% down. Another thing is go through at least one home buying course. I did it through the Colorado Housing Association. I forget which one exactly, but they have a free 4 or 6 hour course.
you, man.
Nice.
Yeah.
Yeah, that's awesome.
You really did your homework.
Why can't all of our clients?
Do you have any friends just like you? Have them call us. Yeah.
That's all your snowboard buddies.
Yeah, exactly. That's awesome. That's great that you went to that amount of preparation, As far as I just want to go back to what first you started with saving, right? Saving money. And like Spencer said, somehow you did that while you were snowboarding, but you saved up a down payment. In this case, the home was around 400. You're borrowing around 80% of that, right? And so what you're making up in that down payment, that cash that you saved, just saved you $250,000 if you hold that loan, right, over the next 30 years. So that's I want buyers to see the advantage of saving for a down payment and making sure your costs are low, not just now, not just next month, but for the next 30 years, you've got a great place.
And you sacrificed, I'm sure you scrutinized every purchase for 2 years to try and scrap that money together. That's, kudos to you for doing that, but also you made life choices, right? So, I could have $100 meal if I go to eat here, or I could cook at home, or, different things like that. But to save $250,000, hey, I can skip in and out. That's a big deal. So
I can't. I love it. I gotta have it.
In and out is a value.
Double combo.
In and out's only $3 a burger. It's a pretty good deal.
Yeah, it is a good deal. Yeah. Do they have In and Outs in Hawaii?
No, it's California, Colorado, pretty much everywhere on the West Coast.
Because it's got to be fresh every morning, so they can't.
Pretty much. They have to be within a certain range of a distribution center, I believe.
right.
So that's major thing.
Wow, we lucked out when they came here.
Yep.
We're saving so much money.
Yeah, we really are. $10 a combo meal compared to 12 at Chick-fil-A.
You get free peppers there.
Yeah, it's true.
Yeah, I haven't even gone for that yet.
Yeah, the little fresh little pickled, I think they're banana or something peppers, right by the condiments. They're pretty good. Just
Next episode, secrets of In-N-Out Burger.
the Flying Dutchman.
Okay, so true or false? This is a little trivia.
Ooh.
You can assume these if you are a non-owner occupant. True or false?
Ooh, I know the answer.
Okay, what is it?
False.
Okay.
You have to be owner occupant.
Got to be an owner. That's an important piece of information for people to know, right? You have to live in the place, at least initially.
It has to be your primary residence.
Yeah. So, and the loan docs say for at least a year is what it's specified, but it could be if someone has a life change, then that can be an exemption for it, right? So a life change would be work that takes you to another place, or a divorce, or something like that could justify as an exception there. But that's the idea, to avoid committing loan fraud, which you should. That's the
avoid. Yeah, you should avoid.
I thought that was clear. Maybe not. Should not do loan fraud. But
just giving us protection.
Allegedly.
Please avoid it.
Yeah. So that's a big deal. But also you can rent it out over time, right? So say you live there for a year and then you decided, I'm ready to look for another place. Let's go do this again, right? Then you could turn that place into a rental with your low fixed rate and then go do it again, right? And find another Assumable.
And cash flow,
which is pretty cool.
A large amount now.
Yeah, and it may take you more than a year to save up for a down payment again and do that whole thing. But this is an operation that could be rinsed and repeated. And I don't know if you've thought about that much, but it's kind of a cool.
I have. So if you live in a place for at least 1 year, from what I know, any capital gains you get don't have to pay any taxes for the first $250, I think. So unless I sell it for more than $250,000 in gain, I don't pay any tax on that if I've lived in it for a year. I usually live each place for 1 year at a time, and then I move, so that's a nice thing. I'll be here for at least 1 year, and then after that I can do what I want pretty much. But
that's awesome.
The plan is to live in there at least 1 year, a lot longer most likely. But if something happens, 1 year of living there, I'll meet the requirements for a lot of the benefits.
Yeah. Yep, you definitely meet. So in 1 year, you definitely meet the requirements of being an owner occupant, right? Which is great. And then my understanding is, and we're not CPAs, we don't give tax advice here, but my understanding from talking to my CPA is that 2 years is the requirement where you don't have any capital gains liability. And as a single person, the principal residence exclusion is what they call it, is $250,000, married couple $500,000 in gains. So you've got that as well, right?
And
that you can do.
They are pushing legislation to try and actually increase those values from 250 to 500 and from 500 to $1 million.
Nice.
So that's, in the works to try and do that to increase, because they haven't been increased since the late 90s.
Yep.
So, which
Yeah.
would be an even bigger benefit for home ownership. So,
Yeah. And at closing, when we sit and close on a home with a seller, the one question, the title, well, not one question, but one of the questions that is asked at closing is, have you lived in this property for 2 out of the last 5 years? And if you can state that you've lived in it for 2 out of the last 5, then there's typically no liability as far as the 1099 goes, And so, and unless you're over that limit of 250 or 500. So that's my understanding of it, right? And Google's understanding of it. If you Google it, that's what you'll find. But talk to a CPA, okay? We just have to be safe as far as our disclosure goes there. But that's awesome. Well, I appreciate you sharing your experience. Anything else that you'd like to add about how this has been for you, or what your thoughts are?
Pretty much my major thinking is, if you buy a house, make sure you have enough time to not rush the whole process. So like, I have my current apartment lease until at least February. So even if it gets pushed back like a month or whatever happens to be, I'll still be solid.
yeah.
Definitely.
Yeah, you gave yourself enough margin there. So,
Yep.
That's smart.
so your research has paid off, and you took advantage of the buyer's market before things get busy in the spring. So, there was no competition. So, I think we actually are under contract at 10,000 under asking price, on top of the free solar, on top of the assumable loan. So yeah, you're winning on a lot of fronts financially here with this one. So
Definitely. Yeah. And this is information, like, listeners, like, if you're wondering, like, how do you guys know about assumable loans or what loan type someone has? It's not typically information that is on Zillow or Redfin or homes.com. And that's something that we can pull tax records on. We can see what type of loan it was that was on this property. We can also do special word searches in the MLS that search private remarks and public remarks just for the word assumable. And we can X out solar, because there's a lot of them that say like assumable solar loan. So we can like do very specific searches that way, that more than you can do on some of those third-party sites to be able to identify and find these for people. And so that can be a huge benefit to reaching out to us, so that we can help you through that process and help you identify one, especially if you're like if you've saved wisely, and have a down payment and are excited about getting into this process. So awesome. All right. Anything else, guys, before we wrap up?
no, Co's been wonderful to work with, and he's very excited about learning about the home buying the whole process in general. And we've been sharing lots of information. You've asked great questions along the way, so that's been good. And your diligence on the paperwork and the mortgage, you've been spot on. So it's really fun to work with a buyer that is just so educated. So makes it enjoyable on all fronts. So even if the patience is a little extra to what we need here, but we'll work through it. So
yeah. And I'm just perplexed at why more people aren't like really excited about these. Some people get it and they're like, oh, I'm going all in on those assumables. But a lot of people don't. Like, there's, it seems like too much work, but it's like the work that it takes is not bad compared to the reward that you get in the end. And I think, you've really caught that vision. So that's pretty awesome. We going lightning round with him? Let's go speed round. Let's see what you got, Co. Favorite Denver neighborhood spot so far?
Don't really have one at the moment. I do enjoy the botanical gardens and stuff. So the one Denver Botanical Garden, went there. They have, I forget what it's called. It's the one that's like west area. That was nice.
That's beautiful. Yeah, I love those botanical gardens. First thing you want to do when you move in?
Pretty much just, I don't know. I kind of want to put pavers in the backyard and get it ready for next year to plant fruit trees and stuff like that.
Oh,
so
cool. Nice.
Kind of planning out the layout of how I want to kind of remodel stuff.
Yeah. Planting those trees for the next 30 years of savings that you're going to have.
Yep.
Awesome. And then best piece of advice for first-time home buyers that are getting into this?
Best piece of advice, pretty much just research, learn, and once you get to the point that you're looking on all the home buying websites and you're like, I could get that, you have to have an agent in order to actually purchase anything. So if you're getting to a point where you see stuff and you don't want to miss it out, that's when you should pretty much get an agent.
Awesome. I can't think of a better way to close it. call us. We'll help you. Co, thank you so much for joining us. You're the best. We appreciate it. And we'll catch you guys next time.